Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. How is everyone doing? Good afternoon, Patrick. Good afternoon, Dave. George. Who else is here? Who else? Charles. Anissa. Dr. Michael. That's where we sit. That's where we sit. Welcome. Hope everyone had a good trading day. So we already went over the inflation stuff this morning. When Bob jumps on, we'll get Bob's take. Also, we went over the jobless claims numbers. Other than that, there was nothing going on today. We had some Fed speak today. Good afternoon, Jacob. We got, looks like Harker speaking early tomorrow morning. We got Michigan consumer sentiment, the preliminary numbers. Forecast at 59, previous was 59.7. In the subcomponent with their inflation expectations. So we'll keep an eye on that. That's at 9 a.m. Central. Then it quiets down except for the rig counts for oil traders. So that's where we sit tomorrow. Your market map, oil with the crude rally up very nicely today. Chips moving up today. Apple pretty flat. Amazon back to flattening out. Healthcare neutral to down overall. You can see the sectors, energy and basic materials leading. Real estate, technology, consumer, defensive. Rotation out of that, chasing riskier assets. A lot of stuff in the risk assets today. 96.2, so we finally fully baked in that 25 basis point hike. Again, we'll get Bob's take when he comes on. And fear and greed is back to greed mode tomorrow. Remember, officially kicks off earnings season. We got Bank of America, JP Morgan, Citi, Wells Fargo, BNY Mellon, First Republic Bank. And the non-bank stuff, we got United Health and Delta. So, setting the tone for stuff on Friday. So that's where we sit with that. So, hold on one second. Was there a stream earlier today? There's one every morning except for Saturday morning and Sunday morning. It's only Sunday afternoon. So, good afternoon, Royal Palms. Let me get Bob right on. We might as well get... Actually, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Now, what we've all been waiting for... Bob, the one and only Iacchino.
Still seem to have you're just choppy to me. I don't think you're that way to anybody else because you'd have heard about it. But hopefully we don't lose connection. Do we have any questions?
Yeah.
We got.
So, all right. I mean, I saw what you put out on Twitter. Let's just encapsulate what you think on Twitter. I mean, the stuff I got from people today is they were like treating it like inflation just printed in the two handle, and that it's a done deal. It's no brainer. Fed should again start pausing now. Start probably cutting in September, and I'm like, why?
All right.
So
let me just start.
My head's going to explode already today.
Yeah, let me just start because. So first of all, none of what I'm about to say means the stock market can't go up. Okay, stock market can still go up based on earnings, based on the potential of inflation to sort of fix itself with a slower to recessionary economy. But what I said on Twitter, for those of you that don't follow me, first of all, I think that's just idiotic if you don't. But I'm going to read what I said on Twitter, and I'll
Well,
read it quickly.
Bob,
Yeah.
before you do
Yeah.
that, tell people how to follow you on Twitter.
All right. Bob_Iacchino. That's IACCINO.
There you go.
And I used to have my direct messages open. I don't know why they shut, but I think if you follow me, then you can direct message me. And I try to answer every single one of them. But I do have the fancy little blue check mark. So Twitter believes I'm a real person.
Well,
Let
you
me
paid for
just
that, right?
what's that?
You paid for your blue check mark.
Yes, I pay for that.
Okay.
They wouldn't give it to me without me paying $8. So I paid the $8, or it's 11, I think. Whatever, doesn't matter. So let me read this real quick. This is what I put on Twitter today, and it could have been a thread, but I didn't really want to make it a thread. And if any of you want, you can download it because I basically took a screenshot of a Word document. Here's what it says. I see so many people saying that inflation has come down the last 3 months or the last 4 months or the last 6 months, depending on the metric. No, it hasn't. Today's month-over-month CPI reading is the first inflation decline since June of 2020, when it came in at minus 0.1%, same reading as today. What has been coming down is the rate that inflation is increasing. The price levels themselves have continued to rise until this past month. And the core inflation, which is what the Fed watches, rose 0.3% month over month. Headline year over year still sits at 6.5%, and core year over year still sits at 5.7%, almost triple the Fed's target rate. Although admittedly, the month over month numbers are much more important going forward. Goods prices are basically in a free fall, which could change if commodities continue to rise like they have so far in 2023. Gold, for example, is up over 15%. I'm adding that. But services inflation is not falling, nor are services wages. The Fed is winning battles, but it's nowhere near winning the war. We also had the benefit of Philly Fed President Patrick Harker speaking at almost the same time the CPI data was being released. And while he said he doesn't expect a recession, he thinks 25 basis point rate hikes are appropriate going forward. He also thinks the Fed fund rates needs to get to 5%. If the Fed went in 25 basis point increments going forward, that would mean the next three meetings, it would take the lower band of the Fed funds rate to 5%, 25 basis points at a time. The current Fed fund rate range is 4.25% to 4.5%. The Fed meetings are listed below, including what Harker says the FOMC needs to do to get to 5% at the low end of the range. Could be the high end of the range, by the way. I'm adding that in right now. February 1st, 25 basis point rate hike to take us to 450 to 475. March 22nd, 25 basis point rate hike, take us 475 to 5%. May 3rd, 25 basis points to take us to 5 to 5.25. Now, again, I'm adding this part right now. Could be that he means the higher band. So that last 25 basis points would then be gone. That gets the Fed funds rate to a range of 5% to 5.25. Currently, the market is pricing in the first rate cuts in November. So the rate range would look like this at the end of each subsequent meeting. June, 5 to 5.25. July, 5 to 5.25. September, 5 to 5.25. November, 4.75 to 5%. December, 4.5 to 4.75%. I find this to go against every higher for longer narrative that Jay Powell and other Fed speakers have been preaching. And it also assumes that year over year inflation will have fallen to 2% or lower, or have a reasonable expectation of falling to 2% or lower by November of 2023 without a recession. I call bullshit. So, why do I say without a recession? Well, because the Fed's been repeating over and over again that they don't think there needs to be a recession. Why do I say 2%? Because that's the Fed's target. Theoretically, I've said this already on this live stream, they could accept a 4% inflation or a 3.5% inflation. And they could do that without admitting that they're now accepting that and cut rates. But if you have an unemployment rate, which fell last time we got a release of it to 3.5%, Why would they cut rates? Why? If wages are still going up, which they are, goods prices are in a free fall, which they are, except for the last week to 10 days, depending on which commodity you're looking at. And if services wages are still rising to keep pace and even beat inflation, why would you cut rates? Why? And why would you say you're going to leave them higher? This is the part I don't understand to what people are talking about. I see no reason, at least right now, and that could change, right? That could certainly change if data changes. I see zero reason for the Fed to cut rates in November. Zero. Now, I'll point to two things. Number one, the most aggressive people who talk about the Fed's lag time from the first rate hike are at 6 months. The most complacent people say 18 months. So if we say the range of the lag for the Fed is from 6 months to 18 months, we're at the lower end of the first rate hike right now, right? Because the first rate hike was what, March of last year?
Mm-hmm.
I'm guessing on that. Could have been a little earlier, could have been a little later. I don't have it in my head right now. So 475 basis points, I'm saying that it was maybe it was February, March, July, September, whatever. Those 75 basis point rate hikes are only starting to get into the economy. So I think people believe that the economy is going to take care of inflation on its own. And if that's the case, that means a recession. But the Fed is saying no recession. And there's a lot of other people out there that are saying inflation is going to come down without a recession. That's what I call bullshit on. And inflation is going to come down without a recession. That's why I like gold. That's why I think when we get to the end of the first quarter, beginning of the second quarter, stocks are going to break those October 15th lows. Unless Mike tells me the price action says otherwise. In which case I'll look for the reason why I'm wrong, and I'll change my opinion because price action matters more than anything to me. That's what I got. By the way, this month over month negative 0.1, I think I said it in the commentary. It's the first negative print of month over month headline inflation going all the way back to June of 2020, which was also minus 0.1. So not a very big deflationary spiral at all.
Well, see, the question I've been asking people today, I said, well, all right, what if inflation even drops to a 4 handle year over year and sticks there? And the answer is
go ahead.
Everyone that I talk to, it won't. I said, how do you know? Because it won't. So that's your answer? Because it won't.
Because it won't. It's just going to go to 2% and that's it.
Yeah. It's just magically
going to
go.
Get there in time for the Fed to cut rates.
Yes. And I said, well, why are they going to need to cut rates? Because some of these people are still in a soft landing camp and they just look at me like, well, if it's soft landing, why do they need to cut rates? Now, the people who say recession, I say, okay, we start tipping into a recession. What if unemployment stays firmer? Why do they need to cut rates? And I just get this blank stare. Well, because we want the market to go up. It eventually gets to, they just want the easy juice financing so the market takes off again. That's really, when you press a lot of these people, not everyone, but a lot of them hard enough, they just wanted to go back to the go-go juice days.
Yeah. And that's fine. That's a fair statement, but say it.
Yeah, well, you got to really press it. If you drill down enough, it's like, okay, all you want to do is get back to what it was essentially, when it was easy money for the first half of, from 2010 to 18 or 17, and then especially easy money from 2019 to the recent rate hikes. You just want that. Is that what you want? Yeah, because it's easy to invest.
That's fine. Well, listen, I'm fine with that, but don't say it's going to. Say that's what I want to happen. That's why I think it will. Okay, right. Fair enough.
Fair enough. But it's, again, people aren't trading. And I'm like, so I asked them about, earnings and fundamentals, and they half the people say it doesn't matter anymore. They just don't matter. And the
Yeah.
other half says, well, that's why we need to cut rates because it needs to keep the cheap financing so companies can have these great earnings. So I don't know
So here's
anymore.
my question. Here's my question to those people, Mike. Stocks are going up. Do they still need to cut rates?
See,
Like
that's
why do they need to cut rates if
exactly.
we've got 5 days in a row for the net? Well, actually, I don't know where it finished. It looked like it was weakening. Where did the Nasdaq? We're not even finished. Yeah, we're finished. Where did the Nasdaq finish? Because I know everything was. Well, I'm sorry. Let's go with the ES. Sorry
It's
to be
right.
manic
It's
about it.
trading 4,002. So it's. I mean, there's a huge potential pin tomorrow because of all the 4,000 option calls that went off yesterday.
Yeah.
So, but it's trading at 4,000.
It's what? It's what?
Trading at 4,000.
Okay.
So, but I mean, I don't know. It's we're but did you see some of this? Did you see some? This is why. This is the little thing that has my spidey sense up too. And we had double patterns. There's still the final target. It became really close today with the Nasdaq for that 11.6. Yeah, there's tactical bullish trading patterns. But then, have you seen some of the absolute junk that was trading today that's skyrocketing again?
Yeah, that's when you know there's problems.
See, this is, I mean, and all right, this is mind boggling. And I talked to a few people today. They're like, well, why? Because I told people to just steer clear of BBBY.
You told them what?
To steer clear of it. It's going bankrupt. And people are
Yeah.
like, it's almost tripled. You know how much money I could have made? I'm like, you know what? They are in discussion right now with trying to secure lenders to take them through bankruptcy so they don't have to close all their stores. They're officially running out of cash in March. They're actually in. That's why the bond market's pricing in the bonds on Best on Bed Bath and Beyond are pricing in over a 90% default rate. Guess who gets wiped out? The common stockholder. You think I'm going to chase this thing when tomorrow they could? I mean, we're in laughable mode. Carvana, and I'm not saying these are things that can be traded intraday there's better things to trade, but had triggered a double pattern. But look at this. Carvana, which is another one that's going to be wiped out. I mean, up 46% today. We're back to the go-go juice. And that's, I think, in some ways, what Powell wants to see gone. In some ways, this insane rotation into what's interesting is there was not an insane rotation into things like Tesla, but you have AMC. You have all this stuff, which AMC is probably going to have to file for restructuring this year, also based off its bonds. But you're getting a bunch of common people sucked into these plays that don't realize, yeah, you don't have to necessarily have the stock price go to zero during a bankruptcy, but there is a high probability that the common stock could be completely wiped out. So is it worth for me to become a diamond hand holder in a company going into bankruptcy proceedings? No.
Honest to God, if I had the stomach for just fighting with idiots on Twitter all day long, which I don't, you might find that surprising, Mike. I actually don't have the energy to do that. I literally would say, please stop saying diamond hands and hodl. You sound like idiots, complete morons. Hodl. You spelled a word wrong. What? You spelled the damn word wrong. I sent you a chart, Mike, to answer one of the questions that was asked. I texted it to you.
Hold on.
I think it's from Charles Lucas. Charles Lucas is the one who asked it.
My head's just gonna explode. There's a way. Well, you're talking about this. There it is. The chart is up. There you go.
I'm going to put the question up.
Where? Oh, where, where was the question? There. Bob, we
Charles
have had
Lucas.
trending
Okay.
lower jobless claims. Also, why is this happening when all supposed cuts? Is there a lag?
Um, Careful about saying we had trending lower jobless claims. Um, we don't really have trending lower jobless claims. This is the continuing claims figures, which is a 3-week average, right? I believe it's 3 weeks. This is not a downtrend. So be careful about that. And if you believe A, rate hikes will affect the jobs market, B, rate hikes has started to, which I haven't seen in the data yet. This is the leader of it. Jobless continuing claims is the leader. So, yes, weekly claims have been lower a couple of weeks in a row. I'm just saying, Charles, be careful about saying we've had trending lower jobless claims. We haven't. We've had trending higher jobless claims. The continuing claims number has fallen the last 3 weeks, which theoretically shows we have about 9 weeks of lower weekly jobless claims. Math doesn't exactly work that way, but I'll just do back of the envelope and say 8 or 9 weeks. But yeah, we don't have trending lower jobless claims. We have a dip in jobless claims. So that's my answer to the question.
All right. So there we go. What Nas industry? Yeah, there was a ton of short squeeze. Now I don't recommend people like when you get these stocks down to $2, $3 that are possibly heading into bankruptcies. I don't recommend. I've talked about this before. Being short them because you have limited gains to the downside, and you do have risk of these stupid pops. So, which are especially true now. All right, but here, there was the article today, and this is why I caution people about chasing quick plays and the no-brainer money. This talks about this 49-year-old trader, Michael Williams in Utah, and this is his trading from Tesla. He was using complicated option strategies to make supersized bets. He admits he got lucky using calls. He turned 300,000 in his Robinhood account into several hundred thousand. Then he took it a step further, piling about 90% of his 401k into Tesla. So it didn't. Soon, 40,000 became 800,000. It didn't last. In the middle of 2021, Williams made a couple bad trades. He was chasing it higher, first losing 600,000 and then 200,000. Now his 401k is down to about 300,000. His Robinhood account has $50 in it. Yeah, it's why we like to teach, slow and steady. Yeah, you can try to ramp stuff up and catch all these moves, but if you mess up some timings on these and keep leveraging your bets, I've seen multiple people turn $1,000, I mean not thousand, but $10,000, $20,000 accounts into the hundreds of thousands, and give it all the way back and more because they get margin called. So, I mean, it's why you can chase silly stuff, you can do silly things, but at some point you can get burned. And I'd rather not to see people get burned trying to chase, especially companies, and time it right with bankruptcy. Bob, how are the numbers of people now working 2 jobs due to inflation taken into account, or are they?
But they're really not. I mean, you can look at the non-farm data and the private payroll survey and find part-time workers, but you got to kind of do your own math. It's just accepted as jobs, which is crap, by the way. But you can see increases in part-time work, and you can assume that a lot of that is a second job by the labor force participation rate. I don't really look at it anymore because I don't really care how many people are working more so than how the Fed's going to interpret data, and I don't think they look at it. So, but that it's not really looked at if that's what you're asking.
All right, the fun question from George. Bob, Mike, one of these three must run your HOA. Who do you pick? Sam Bankman Fraud, Elizabeth Holmes, or Gavin Newsom?
Oh, Elizabeth Holmes all day. She's an optimist.
Can I say I'm not going to live? I won't live in an HOA because I
Elizabeth
won't.
Holmes will say, Elizabeth Holmes will cut the HOA and say that they're putting in a 4-level pool with a waterfall and no bottoms on any of the levels, so that the water just floats. Yeah, she's an optimist.
Sam Bankman will just take all your money and buy his parents a house.
And Gavin Newsom will tell you that the rats that are crawling in your home don't exist.
And he'll
So I
then
go
keep
Elizabeth.
he'll keep raising your fees too. He'll just keep
Yeah.
raising your fees and tell you like it.
They'll say, we're going to get rid of the rats just like we have, but there's still more to do. And then there'll be more rats and a higher HOA. So I go Elizabeth Holmes all day. At least I'll be expecting a 3-level pool with no bottom on the top 2 levels until I realize it's not scientifically possible.
What is a 3-level pool?
Well, it's like her blood work equipment, right? It just was a lie. It didn't work.
Yeah, but I don't even know. I can't even conceptualize what a 3. You mean a 3-story pool? A 3 what?
No. Imagine a pool,
Okay.
then another level of just water with air in between it and no bottom, then another level of just water with air in between it and no bottom. That's
Huh.
what Elizabeth Holmes would promise, so that you could dive through one, dive through the other, and land in the main pool. But it can't be possible, just like her blood measure equipment wasn't possible.
All right, I'll go with your pick.
It's got to be. For those options,
Can yeah, with
well,
those options, can't we throw Elizabeth Warren in there just for fun?
no, we cannot. We'll throw her in the 3-level pool. How's that?
Didn't she say today that the Fed needs to take a closer look at their data and
She just, honest to God, she should just shut up. She is the, other than Maxine Waters, she's the least intelligent senator. I mean, actually, I shouldn't say that. Those two have been the least intelligent that have made public statements lately.
okay. I see some other stock things. I'll come back to that once we're done with Bob. So anything else for Bob before he leaves? I mean, thank you for the
I
interesting
will leave.
question, George.
That was a good question.
Anything else? I'm not seeing anything else. Any thoughts? All right, I have one final thought. Any thoughts? We're officially kicking off earnings season tomorrow. Any thoughts on bank earnings or?
Bank earnings I would say, have never been a strength of mine, but I would say that I don't remember who brought it up last week, but I thought it was a really good point. Watch the loan loss provisions. Because if that's the reason for the weak bank earnings, if they're weak, I really think that that's a little bit of a canary in the coal mine. So there's definitely defaults going on. Oh, I'll send you something else real quick, Mike, before I go. I texted it to somebody else, so I'll be able to find it really quick. It's something more that you're going to want to read, though. It had to do with KW Homes, I think.
KB Homes?
So it's a KB Homes. That's it. I don't know why I said KW.
Their
God,
cancellation rate was
Well, it was, yeah, that's part of what I'm sending you, but it's more than that, right? It was more than just their cancellation rate. And you guys remember me telling you the story about the person I know that actually took advantage of this. And that could certainly happen again in higher end homes. So I'll read this while you're expanding it. The KB Home reports Q4 gross orders down 47%. The company states reflecting sharply lower demand stemming from higher mortgage interest rates inflation, and other macroeconomic and geopolitical concerns. I don't know why KB Homes would have geopolitical concerns other than supply chain, which apparently, according to all the people you know, Mike, has all worked itself out.
Yes.
Fourth quarter net orders of 692 and net order value of 362.7 million decreased from 3,529 and 1.77 billion respectively. Gross orders for the quarter of 2,169 were down 47% from 4,072. The cancellation rate as a percentage of gross orders was 68% compared to 13% last time. Those are massive numbers. Massive numbers. So those kinds of things can work their way into, more. I said when somebody asked about the big banks, I wish I remembered who it was because it was a really good question. Somebody asked about the loan loss provisions for the large banks. I said I thought it would affect the regional banks more, and the KB Homes thing, that's going to be more regional bank than big banks. So,
All right. Well, there we have it.
all right, guys,
We shall talk
that's
to
it.
you. Thank you. We shall talk to you next week, right?
Yep, talk to you on Tuesday as long as my internet's working.
Okay. Well, we got through this one fine still.
That's a whole nother thing. So we'll see you guys.
All right. Talk to you then. Bye. All righty, everyone. So, I'm just going to do a very quick overview. Yes, I think well, let's just get those quickly. Baba and Netflix. Baba. We had a little breakaway gap. Closed above the 62.5, hitting the 75. Next target's higher, 118.79. I would just be on any pullback. I'd be watching for the pullback to this second gap back from Friday the 6th to Monday the 9th, pulling back into the daily rotation zone. But as long as you don't really break the level I'd be watching is back was 104.70. Other than that, another push higher, 118.7. This would be the major topping area between 118.79 and 125.84. With the key level I'd be focused on is 120.78 on a push higher. Okay, but I would be very cautious at this point unless we get the pullback to the daily rotation zone. Why? We are extremely overbought and trying to roll over. We have cycles at the top. And on the weekly, you can see here, incredibly overbought with cycles at the top. So this thing could easily start a pullback now. So I would be in a trailing mode and then watching for the pullback. There's not a strong topping pattern yet. There's not even key divergences on a daily basis. So I would not be surprised to see a pullback and gauge it on the next push higher. Okay, why is that off? Why did that get shifted? There we go. 117.36 to 125 with the key level being 120.78. So let me mark off the level that I'd be focusing on. A pullback into that rotation zone. This is going to be key. This key gap open. You had it tested twice here, and then you got the break through it. So that's the key level I'd be watching. You start getting below that, you could easily see a pullback to 100 pretty rapidly. Sorry, my levels were off slightly. So the key level that, especially if this rotation zone gets out of the way, which it should pretty quickly, you get a close back below 100. You could return into the 90s and retest. You have a gap left here and a 200 moving average. So again, that doesn't change anything. It would be in trailing mode, knowing where a stop level is if you've been long this to take off the table. But there is no major topping pattern yet. There's a potential for a pullback, and then I would be watching for a more substantial topping pattern kicking in. Netflix, again, after returning to the high area, we see something now. Yes, this is a completely valid. Here are your next levels. Nothing's changed from the last time I did this. If it pushes through, this is a key breakdown level. I'm going to bump this up just a hair at this point based off the weeklies. And even, let me just see where that anchor point is. All right. Let me get the minor levels on here. So, and look at that. If it does continue to break out, my next target would be 340. That does not invalidate a potential weekly double top. So this would be in trailing mode. This would be in trailing mode. The thing that would really change everything, you'd see that would also be out of the way on the rotation zone. So it's stair-stepping higher still. We got earnings, but this would be a key level from a weekly big shift. From a daily shift at this point, let me take these off and reverse them. Close enough. We might have to raise it if it makes new highs. Oops. We might have to draw it in the correct order if I am capable of it. The key area that really starts, it's getting overextended, overbought, cycles at the top, pinned up here. This is why I'm starting to watch for substantial topping patterns going into next week. We've got a lot of things just pinned in very overbought mode. That doesn't mean it can't get more overbought, but it's not going to stay here forever. The key level in the short term would be starting to watch this 300 level. You break below there, I mean, the technical tipping point would be 292.65, but I'd really keep an eye on this 300 level. In front of there for an aggressive stop, and I'm not talking about super tight stop, I'm talking about more aggressive would be about 312. Why? That's a key breakout zone, which was tested on this massive candle back from, what date was that? The 10th. So that's where it sits now. I don't think there's another key topping pattern just yet. If you needed something really close to the market for a stop, I would not change unless you're talking a 5 or 15 minute trade. My key level on a shorter term closing basis, and I mean a 1 hour or 4 hour, would be roughly about 222.90. Again, this is why we don't give, like, I can't tell you specifically what to do because I can list out the key levels, and depending on your position size, your time duration, your trade duration to stay in it, you can choose your appropriate stop level. But the next major target, if you're trailing and it does continue to run higher, would be just in front of 340. All right. Where do we sit? The dollar is very oversold. I'm going to be watching for a dollar reversal pattern coming up now that we've hit this 50% retracement mark. We're between the 50% and the 62.5. You can see here on the weekly. This is a key area we'll be watching for a substantial reversal. And we have pretty decent support about 101.40. We don't have a reversal pattern yet, and I'm talking about a more substantial, not a 15-minute reversal pattern. things again. Dollars getting oversold. Cycles getting to the bottom. Lots of other things are getting overbought. It doesn't have to shift tomorrow, but it's on my radar screen. Back to here. You know, I'm watching for still with all these options expiring tomorrow. No, it's not the major option, monthly option expiration tomorrow. But there are a ton of short-term options that were put on that expire tomorrow. So I'm still paying attention very close to this 4,000 level. You can see all the back and forth trading. If I put a line at 4,000, you can see all this trading around that pivot. So that's what I am watching tomorrow. The next target on a continued rally would be 4,033. Nothing's changed. We get a close above there. I'll continue in bullish mode. It is still in trailing mode at this point. Officially very overbought. Officially cycles very at the top. And I want to see how this weekly ends up tomorrow. So, the key support for anybody is coming in about 39.91 for overnight. You want micro harmonics. This counts. This counts. If you're looking for micro levels, these completely count from this one candle. So 40.30 to 40.33 and then 40.38, but 40.33.25 is important on a closing basis. NASDAQ, still the final target. What was the high today? 11.579.75. Still the final target, 11.605. So we could easily still see that tomorrow. My key support level is roughly about 11.475 on the bigger time frame. On the very short time frame, I'm watching this roughly 11.500. But there's no other update there. Spiking above the 50% retracement from this down move. So I am still, like the S&P, I'm still watching for rollover potential setups in this area. The Dow has the only, this is valid. It's what I'm keeping an eye on going into tomorrow. It has to be a 15-minute time frame. It's going to be interesting going into overnight, but need a close below 34,209. Key resistance, 34,400. Russell, closing in on that 87.5. 1890, so that's still my target area for tomorrow. You got a little above this, about 1896. I mean, the Russell's trading like there'll be no recession and like we've put in a major market bottom. That's how the Russell's trading right now. And we have a lot of small cap junk trading like the Fed's cutting rates back to zero, which is not happening right now. The DAX, still watching 15,163, watching for this to get in a topping area. So much stuff is getting very overextended. It's getting a little ridiculous. Notes, finally tapping out on this key level today that's been in place. That's a longer-term harmonic. So other than that, my key support coming in at 114.21. Next target area, 115.25. Dollar index, we already looked at. This is very key. This 101.50 area is very key on a closing basis for me. Crude, tapping the 50 today. On a continued, if we get a push through there, next target's 80.36. Not yet quite overbought. So as long as we don't get a close back below about 76.75, still watching for a push, but this is a trailing stop perspective. Natty Gas, Nothing that invalidates. Remember, we had the potential percent B buy breakout. And look, so if it was traded, I'm using this as a teaching moment. Broke above here earlier. I'm going to mark off a couple key levels. The first one was the break. So if this was traded intraday, this is something that doesn't just matter natty gas. I don't care if you trade natty gas or not. So you see the break above that previous high. So if this was played for a break, fine. But it can't be carried forward with the close back below it. So, and it slammed into the rotation zone, which was a higher line. Look, the daily does is why I say don't ignore the higher time frames. So the break, look at all that test. Boom. Then reversal and coming back down. So could that be used as a front run? No. It could have been used as a breakout and then has to be unwound with that close being down here. It can't be carried forward as a potential front run. Did it invalidate the potential double bottom? No. Gold, still in trailing mode. Coming up, finally tagging the 62.5. But gold is trail mode, very, very overbought. Cycles pinned to the top. So I am substantially watching for the rollover play and pullback play in there. As I've mentioned before, copper stalling out again at the second level. It's just a trail, but I'm watching for the next pullback play in copper. Expecting more intervention from the Bank of Japan with this 10-year JGBs still pinned at 50 basis points. We had the big sell-off today, rotation back down in the yen. So now still key resistance. I'm watching if it does rally, how it relates in a closing basis to about 130.65 on any rally, but that's now key resistance. Euro, watching for the topping pattern coming in here, rallying again, strong rally, but against major longer term resistance up in this area. A pretty key breakdown zone. Also, from your overall decline harmonics, if we do push a bit higher, 109.42 is going to be very key. That enters the big long-term breakdown zone. But you can see we're against this little resistance ledge. But overall here, you can see all the consolidation back in here. So this is getting into a very key area with weekly cycles at the top trying to roll over. So would not being chasing the euro higher at this perspective for at this point. Pound, nothing going on. Bitcoin, again, we saw the rotation into risk stuff, like I pointed out. And Bitcoin taking off. Next target area was 19,221 and then 19,537. But going to be watching for when we get that risk off. I hate that term, but the risk off mode again. We'll be watching to gauge the pullback on that. It's chasing stupid higher again. All right. Does SM have more upside since the oil company pays a 15-cent dividend, which has an upgrade off the highs of 542.45, 52.45 SM? Does it have more upside? I mean, it came back down to key support, but now it's trading against key resistance, and you have a lot of stuff, a lot of good energy did not break down like this. This is not one, and it's only got a 0.94% dividend yield. Uh, this is not the first thing I'd be chasing higher. There's a lot of other energy stocks that are in a better position. Can it still bounce a bit more? Yeah, but I would not be I'd just be in trail mode at this point. You break back down below 32, I think it will retest the lows again there. There's better stuff to play with, like Exxon coming within shooting to see this at a pullback, but back to the high areas. Now I'm expecting if we do get a little pullback in oil before that double triggers, watching for another pullback. But Exxon, even 110.50, 111 is more interesting than trying to play SM against the daily rotation zone. Also, XOM has a 3.27% dividend, and there's a very clear line in the sand for a stop perspective. So there's been a lot of short squeezing and covering, but that's why I'm saying this. A lot of this has been a rotation into junk rally. Things are chasing higher, and it's not the highest quality names. Yes, some high quality names have had a bounce, but the highest quality isn't being chased. It's chasing into junk. You'll be here tomorrow. Was confused when you said you will not be available before the CPI number came out. Well, I wasn't available for CPI because my stream was after I. Carvana is not a good buying opportunity, Coco. Carvana will be filing for reorganization / bankruptcy at some point. So it is not a good buying opportunity. And it completed its double. There you are, virtually completed its double. You got the 50 right there and key resistance. This is not a good buying opportunity. It was a little breakout trade, short squeeze opportunity, but nothing I would be holding. If you're trying to bottom fish, these are not the companies you want to be bottom fishing for a hold. You don't want to be bottom fishing companies that could announce a restructuring / bankruptcy at any time. Yeah, the short float is. That's why it is. Do I recommend? Look, this is actually a gift to shorts at some point because and then you unwind it. This is where I don't like carrying stuff. You get into low single digits on any company going for bankruptcy. It's not worth the risk to play it even from the short side. Because you can, in this environment, you can get these stupid asinine moves. Remember Hertz? So, at some point, if you're short, you unwind your position when it gets too low and look for better opportunities. It's on a case-by-case basis, Royal Palms. All right, I got to wrap it up for now. I actually have a bunch of stuff to do. Thank you for tuning in. We can look at more stuff later. But that's why I'm like with these, let's say people are trying to hold. I mean, I've got stuff that people are saying this is going back to 30s, 40s, $50. You'd have to be insane. First, this is a squeeze. This is also a gamma juice squeeze. But if you're trying to hold this back to 30, 40, $50, you're insane because Carvana could wake up and announce restructuring. And then what are you left with? So these are not the kind of things I'd even hold overnight. And again, if you want to play these, I've talked about them before. Set aside a very small percentage of your account. It's the Vegas percentage. And treat it like you're going to Vegas. Hey, if you hit a jackpot, fantastic. I'd suggest if you hit the jackpot, you walk away. But is that fully fine? I don't have a problem if somebody sets aside a small percentage of their account to gamble with some of these squeeze silly plays. But don't make it your whole account. And don't, just like if you hit a jackpot in Vegas, don't sit and pour all your money back into another slot machine thinking you're some genius who's going to hit jackpots all the time. So what I read that thing about a bunch of these Tesla people. I mean, there are people who are friggin' mortgaging their house. That's not smart. I'm all in on Tesla. I've taken every asset I own and put it in Tesla. That's just not, I don't care what the company is. That's not a smart play. Period. Would I take all my money and put it in Apple? Is Apple going anywhere? Is Apple going out of business? No. Am I going to take every cent I own and put it in one friggin' stock? Not on your life. This is where we still have a lot of damage to do in a market. We still have a long way to go before we get stupid out. Thank you, Ted. On the next, let's cover some of this tomorrow. I'm running out of energy. What's my favorite company to buy? I don't have one favorite. I've told you still. The things I am looking at are beaten up, well-paying dividend stocks for longer term things. Why? Because collect a dividend. Talked about this, things like Intel. I'll be looking at plays, other things, especially on pullbacks. Verizon was a good play. Verizon, not necessarily chasing here, but it's okay, but I'd rather especially have it pull back into the mid 30s again. Verizon's not going out of business. Pays a decent dividend. Don't love the company, but pays a decent dividend. Earnings can still come down. That's why you got to be picky where you enter, but it's already at a run-up play, so this is, for me, I would not be chasing it at this point. But when we get another substantial rollover and this gets beat up again, I'll be looking for something like that. I'll be looking at stuff like this once this gets to some key levels again. As again, it's in a long-term pattern. Right now, it's just chopping sideways to down, and we don't have anything to invalidate this little double top. But you got things like Altera out of favor too right now because people are running into stupid. Altera's not going anywhere. It's a little high in the PE. That's why I like it to come back down. But you're paying an 8% dividend. So you accumulate stuff like this. Why am I into these kind of things for longer term? Because they'll pull back. If we get another market dump, yes, these are going to pull back. But I can even lighten up on some of them. But you got a dividend. The dividend gets better if they pull back because it's a percentage. You got to take that into account. They're not going anywhere. They can withstand some major pullbacks, even the stock price pullback. Do I want to be in risk assets and high flyers when we take the next major leg down? No, I don't want to be in them. Because those are the ones that are going to have some damage. Yeah, like NVIDIA. Would I be chasing? Nvidia is a tradable stock, but not an investable stock for me. I'm not trading something at 68 times multiple into a slowing economy. Yes, can there be swing trades? Completely. Is this something I want to own long term? Not on your life. Do I still see Meta rolling over again? Yes. Is it tradable in the short term? Yes. Is this something I want to own up here? No. Could it reconnect with its 200? Sure. There's a difference between a trade in this market and an investment. There'll be, when we finally get to a longer term market bottom, there'll be a lot more investments. Until then, there's fewer investments, there's more trades. Meaning, I don't want to get married to the position. I'm not touching REITs. I talked about that the other day. I think there's going to be a fair amount of pain still, especially in commercial real estate. So no, I don't just buy stuff because of a dividend. But I said, and real estate is not REITs will be in a good position longer term again at some point. It's not something would chase now, from my perspective. Yeah, you still got the potential double on Intel and AMD. Again, why do I like Intel versus AMD? Because Intel, nice dividend. AMD, look at the PE still, 41 with no dividend. Okay? Neither company's going away. AMD is tradable. Intel is more investable. Well, it depends how they've structured their debt and what kind of debt financing and what kind of debt structure they have rolling off. But companies that need to refinance debt or have debt rolling off, they're going to pay higher rates, which is more costly to a company. That's why a lot of people, that's why we also get this, when it was free financing essentially, you had a lot of zombie companies just borrow, and people paying, absurd amounts for the company because they could just keep financing debt dirt cheap. You can't do that anymore. That's why a lot of people still want the Fed to cut rates again. We'll take it back down to zero so we can go back to the rah-rah juice days. Well, zero rates aren't healthy. All right, I'm wrapping it up. On Intel, pays a dividend and insiders are buying, and insiders on AMD are selling shares. That should tell you something also. I mean, I've talked about Intel forever now. Will it pull back again? Yes. Especially in the next substantial downturn. But look, I mean, people flip that again. People say, oh, look, it's going back. Why would you talk about this stock? Now, okay, well, now, okay, what's wrong? And their next earnings it could come back down on their next earnings. But for a great core position, so from my perspective, it's a great stock. Is it the highest dividend paying? Well, the yield drops on the rally because It's based off the share price. However, it's got a decent dividend. P to E. Yes, we'll probably get some more earnings compression. That's why I will not be surprised to see another drop in it. It's very overbought now. Would I be starting a position here? No. This, we talked about it even when I said, look, it closed back below the 62.5. We talked about that. I said, watch for it to come back down to the 87.5 area. Boom. Made a double bottom. Now it's gone to, would not be chasing it higher. You got to be picky on some of your entry points here. Will it give more entries in the future? Yes. So don't worry about it. Yeah. With less, also you're going to have less semis in play for a number of reasons, but Intel's not going to zero. They're actually been working on really getting their cost structure under control. So, again, NVIDIA is not going to zero, but NVIDIA could have a substantially more pullback with very little dividend versus Intel, which could have pullback with a decent dividend and is not a high flyer. For long term, those are the kind of things you're going to want to look at. When we get through with a bear market, we put in a long-term bottom and we start another growth cycle. Can you pepper more of your, from my perspective, can you put more plays, more, hey, these are earnings expanding plays with no dividend. We're just going after capital appreciation. Yeah, there'll be a time and place for that again too. From my perspective, this is not it. We'll go over other plays tomorrow. I got to now run. I said 3 times I'm going to end it, and I actually have to end it now because I need to deal with a couple things and get the dogs out. But we'll take some more and also come back on, on a Sunday, and we'll do a quick little session tomorrow. So if you have some other ideas, put them in, and I'll talk to everyone then. I'll be back 8 a.m. tomorrow morning. See you all then. Bye for now.